Hi, I'm Peter Rose, founder of Longwood Currency Trading. There's more to trading than just trading. Had to get out of the house, just wanted to get out and walk around and unbefuddle my brain. Come out to see Sue's flower gardens. They're really starting to blossom really well. I hope this is showing up on the video because they're so pretty. The daylilies just started coming out. This is mid-July of 2023. There's more to trading than just trading. I was just recently in a discussion with someone who had contacted me about their trading and could I help them out, and I answered a couple of questions for them, and they kept coming back, and we had a nice series of conversations. Well, here's the problem that I finally realized with this particular person, is that they really didn't have any concept of money management, let alone what we refer to as position management and risk management. But money management itself, and not as it goes to trading, but just in general life. You know, we were talking about doing some consulting or taking a course or something, and it's too expensive for him, and so he's not going to do it. But that's okay. I'll try to continue to work with him through emails. I don't know what my success is going to be, because he's trying to solve trading problems, but he doesn't understand money management problems. Not making much money from a job standpoint. It might have been $48,000 or something like that. I think we talked about it. I'm not going to mention the name or anything. But he's driving around in a $40,000 car. And it's costing $400 a month in car payments. Instead of living in an $800 apartment, because he's making $48,000 a year, he's living in an expensive area, and he's almost $2,000 a month. Now, he has a wife, and she doesn't make as much money as he does, but you know, they can afford that $2,000 a month payment. They have to, because other than that, you're going to be living in the woods in a tent. But in just talking to him about his life, and they go out to dinner twice a week, because neither one of them like to cook. And they're doing the obligatory week vacation to wherever you're going to go. And all that's good. I mean, we're in industrialized countries, and you work hard. You don't just stuff your money in the bank. You have to use it for the enrichment of your life. You don't know how long your life is going to live, or how long you're going to live. And so you can't just work and bank. There has to be some flexibility there. But there are choices that you can make. And we get talking about, oh, I could only fund $5,000 in my account. That's all the money I have, and I've got $10,000 other dollars in the bank, but that's it. That's liquid, and the rest, maybe another $20,000 is in their 401ks or IRAs or something like that. They're in their late 20s. And so they're still dealing with, one of them is dealing with student loan debt. But the problem is some of the choices, like going out to dinner twice a week. What are you going to drop? I don't know. Sue and I went out the other night just to a lunch place on the water, and I dropped $80 for a lunch. She had a martini, and I had a beer, and we had a couple of sandwiches and the tip, and it was $80. So we go out to dinner, it's 110. So and we live in the sticks. These folks live in not a big city, but a bigger city than we've got around here of 30,000 people. So their costs are going to be a little bit more. I guess the issue is, I suggested that he read the book, The Automatic Millionaire. I think that's a a wonderful book. It puts things into perspective. Yeah, it talks about stupid stuff like not going out and getting a latte every day on your way to work, because that's $5 a day for the latte, when you could either put it in a canister and bring it with you like I did for many years, or you know, buy it at work. Well, they got a communal coffee pot that's going, and you put 50 cents for a cup in, or $1 or whatever it is, or you join the coffee club or something. But $5 to go out and grab coffee on your way to work every day. There's 20 days, 20 working days a month, and so you're blowing off $100 a month. That's $1,200 a year, just for coffee. So if you cut that in half, you'd have an extra $500. Instead of buying a $40,000 car, why don't you buy a $5,000 beater until you can afford a $40,000 car? And why are you paying $450 a month or $400 a month on your car payment? Because it was a used car, so you can't get 2% financing. You're getting 6 or 8, or I don't know, whatever the hell they got, because they can't afford to pay the $40,000 for the car. And so they got $400, I think, a month going out in a car payment. $400 a month times 12. I mean, that's $5,000 about a year. You could take the $5,000 and buy a beater and drive that. And yeah, it's going to cost you $1,000 a year to do maintenance and upkeep that you might not have to pay on a new car. But you didn't pay $60,000 for the new car. You paid $5,000 for an old beater. Okay, so instead of spending $5,000 a year in car payments, there's another $5,000 that you can have. Bought the car, it's $5,000, and now you've got that extra $5,000 a year. So there's $7,000. I've just talked with him. Is a really reasonable way of saving some money when he doesn't have any savings and he can't afford to, you know, can't afford to do anything. God, going out to dinner twice a week, even if it's 100. Oh man, I don't know. Let's say they're not doing $100. They're going to Friendlies or something. It's going to cost you $80. You go out twice a week. Let's call it $150 a week. $150 a week. Come on. That's that's $600 a month. That's $6,000 a year. Cut it in half. There's another $3,000. So now you're $679. You got $9,000 that you didn't spend, and you don't have enough money to fund your fucking trading account. What's going to happen? And I told him this. He didn't like me anymore, by the way, because I tell it like it is. What you're going to do is you're going to take that $3,000 or whatever you think you're going to cobble together, and you're going to listen to some fool telling you to trade at 200 to 1, and you're going to double that in 4 months, maybe. So now you've gone from 3 to 6, and then, oh, geez, now you're really hot, and you think you're the king of the world. You're going to double that again, and you're going to go from 6,000 to 12. All right, so now you got $12,000, and then you're going to work on that next top, and you get about $20,000 in there, and then all of a sudden, it's all gone. And you might be left with $3,000. And you say, well, you know, I made I didn't lose my $3,000, but look at all the fun I had. No. Because every time you took that money out, if it took you a year, let's say, to double, we just did it in 4 months, you'd be paying income taxes on the money that you made, or any money that you had to pull out. This is to take the $3,000, now he's got 6, and he pulls $2,000 out, and he's trading 4. Well, that cuts the compounding in half. What he doesn't realize is even if he's successful at doubling that account, even getting 50% or 60% on that account a year isn't going to change his lifestyle. It may pay for going out to dinner. Well, you're just shitting out your future net worth by doing stuff like that. There's more to trading than trading. And it talks about money management. And money management is what you do with the money that you have. Some of it you have expenses. Some of it you spend on stuff that is important to you. Some of it you save, but there's got to be the other component is some of it you've got to invest. Now the savings could be investing, but there's got to be a component of that money that's going to be used to do what this guy's trying to do, learn currency trading. Now, he could learn and apply it to stocks if he liked stocks, if he thought there was opportunity in stocks. He could do real estate. I don't think he'd get into that, but you never know. Maybe he could put something together, do a no money down deal, or he could start a small window washing business and on the side and make money that way, or snow plowing. There's 1,000 things that you can do, but the idea is to have that money working for you instead of you working for the money. That's what the trading is all about. You're not working when you trade. That's having your money work for you. If you go to the office and do what somebody else tells you to do, you're working for your money. If you do something that has your money make money for you, that's what I'm talking about. He picked a good vehicle, but he doesn't have the money management background in order to achieve the goals that he wants to achieve. He said if he could make an extra $10,000 a year, that would drastically help in their current financial situation. And if he followed some basic savings guidelines, he could save another at least $5,000 a year of what they're spending, right? So if he could generate $10,000 from the trading and save $5,000, that'd be $15,000 that he's making and saving. You have to have a bank that's large enough that throws off that $10,000 every year without going negative into that amount. You have to be pretty sure that you're going to get that $10,000 or $1,000 a month, let's say. How tough is it to make $1,000 a month? It's not very tough at all. You just have to have an account that's bigger than $3,000 to do that. Can you do that on a $10,000 account? I don't know. Figure it out. You want to make $1,000, 20 into 1,000. You're going to make $50 a day, right? Well, if you're trading at that's 10 pips a day, every day. You got to do that. If you're a 60-40 trader, it means that 6 times you're going to make a 50, and 4 times you're going to lose whatever it is you're going to lose. You're not making $1,000 a month. You see, and these are things that not only didn't this particular individual understand, but I constantly run into it. I mean, I don't know who else they're talking to or listening to these friggin' ads or watching these guys on TV, but nobody is teaching money management for life. All they're doing is selling a course to teach you how to swing trade or work with a Bollinger Band. I don't get it. Anyway, that's my rant for the day. Please, when you're considering getting into currency trading, if that's where you're at, or if you're currently involved in it in a small way, you got about 6 months of experience or maybe a year and you're not having the success that you want to have, or you're in that my target group of that 21 to 34-year-old who's trading somewhere in the a low to mid 5-figure account size and just not getting the percentage return that makes it worthwhile doing it. I mean, if I retired a millionaire from my real estate investment, I did real estate for 40 years. And if I looked at a yearly return from my real estate of 10%, I wouldn't be interested in that. I wouldn't be interested in the risk that takes. You gotta be doing 25% or 30%, because every now and then you're going to get hit with a big hit, and you're going to need that in order to catch up, because that's just what you have to do. So the more risk that you take, the higher the gain that you're going to shoot for. Now that doesn't mean just indiscriminately taking risk. I think that's something else that I hear a lot about. You know, I talk very openly about the losses that I take and the gains that I make. When I'm making a lot of money, I'm happy, everything is growing, and then I'll take a hit. And a hit against a six-figure account, a mid-six-figure level account, could be $40,000 or $50,000. When I started out, I wasn't trading. I lost $40,000, but I wasn't trading a six-figure account. I was trading a $45,000 account when I first started after listening to all these guys. And I lost it. And I've got good money management skills from all the stuff that I've done in my life. And that's why when I stepped back from it, I said, well, I should use the skills that I have, and I shouldn't have lost that $40,000. I took the remaining $5,000 and I doubled that in about 4.5 months. That doesn't mean I could take a $500,000 account and double that in 4.5 months, or $100,000 account and double that in 4.5 months, unless you get some really, really good stuff. I mean, I was trading six figures last year, as I've said many times. There were 3 months where I had $30,000 net gain months. This is pretty good months. So you have to constantly balance the reward that you're looking for the risk. And when you see that the reward is really high, you don't try to create a reward by saying this stupid risk to reward ratio. Well, I'm going to risk 1 to make 3. You're not going to make 3. That's just the most asinine thing. If you have anybody talking to you about risk to reward ratio, just turn it off, because they're going to pollute your head with stupid shit. I know. I've got a bachelor's degree in physics and almost a minor in math. I know a little bit about whether risk and reward ratios work or not. They ought to be talking about win-to-loss ratio with average win values instead of all that horse shit that they're talking about. In any event, please be aware that you need to be cognizant of money management in your personal life, because if your personal life isn't structured correctly, how do you expect your trading life could be structured? And so that's why when I work with someone, it's life money management, because that's going to support the trading money management. And that borders on some psychology. I try to limit the amount of psychology stuff when I'm trying to work with somebody to 3 concepts, and you get that, and then you don't ever have to worry about it again, because I can show you how to form rules that take the opposite side of that are more desirable than the risk that you would have to take. So there's more to trading than just trading. Be aware of that. If you have any questions, throw me an email. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.